Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at MTV. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Now, before we get into the video, if you haven't seen the previous update, make sure to watch that before watching this one so that you have more context. It's going to be in the top right-hand corner of the video. Also, if you want to support Ukraine and you want to help financially, then there are two donation links down below in the description. You can support the Ukraine's military and the Ukrainian refugees by donating via those links. Those are official donation links. You can triple check them before donating, obviously. Those websites are not set up by me. They have nothing to do with me personally. I'm just trying to share this information and trying to help my country any way I can. So yeah, feel free to do so. And let's get straight into the video. Now, jumping into the daily chart. So I'm just going to change the color of these trend lines. I should have done this before the video, but I'm just going to do so just so it's easier to explain. So obviously what is happening right now, Bitcoin is below $38,000. And I did tell you that if Bitcoin was to start falling, was to start, correcting heavily, then we would probably see Multivac lose this yellow buy zone. And that's, what is happening right now. And you don't need to be a rocket scientist to see that coming. Obviously, if Bitcoin's going to be dropping, you're going to land on some support zones on your favorite altcoins. Now, the support zone that I'm eyeballing here for Multivac is the 0.5 Fibonacci retracement over here, sitting at 0.00027439. So this is the zone that we are looking for over here. So as you can see, you did retest this zone over here, and you did come, as low, almost touching the 0.5 over here. So 2 times you came very close to the 0.5, and this is, perhaps one of those times. As you can see, previously we were in this, the pink trend lines over here represent a huge falling wedge. We lost the support of the falling wedge, and now we are in a smaller falling wedge over here with a target over here at the top of the yellow buy zone at 0.004326. So if we just see what are our possible gains here, so that is a 38.5% gain for anyone who looks to enter right now. So obviously, if we have a bounce from the 0.5, let's say to the next fib level, that will be a 57.7% trade. And the next fib level above the 0.5 over here is the golden ratio, this 0.618, the most important Fibonacci level out of all. So just keep that in mind. So yeah, we lost the large pink falling wedge. We entered a newer one. And if you start free falling here, you can obviously go even lower. Let's look for the next support below us, 0.001604. Now, like I said, it all depends on Bitcoin. If Bitcoin's going to come back all the way down to $30,000, who's to say that MTV cannot go, below 0.001, right? You have your next support at the 0.236 over here. At 0.00099942. So if we continue going down, I'm going to be, continuously giving you more targets to the downside, because if you're losing support levels, you have targets to the downside. However, if you're breaking resistance levels, you are in an uptrend, you have obviously targets to the upside. So right now, I can't tell you when we're going to get the reversal, because I would be lying if I said that I could tell you, right? It all depends on Bitcoin. Hopefully, we can get some bullish news into the market. Hopefully, something good comes out next week. I'm not really following the news because of the situation in Ukraine. Obviously, it's, I don't really have a lot of free time right now. So I'm just trying to get back into the daily upload schedule. And I'm not really keeping up with all the latest crypto videos, crypto news, unfortunately. So we'll see how it turns out. Obviously, anything can happen at any moment. And if this is our, rollover into the bear market, then it's not a big problem for me, because I'm not going to be financially affected by the amount of money that I have invested in. And I'm just going to be dollar cost averaging anyway, right? Because that's what you do on these pullbacks. So we have your support levels over here. You have your target from the falling wedge, assuming we don't lose the support of this falling wedge, which is this white trend line over here. And a falling wedge is basically a triangle pointing to, 45 degrees to the downside over here, as you can see. So you're going like this, and you potentially just break to the upside. But you can also break to the downside, just as we saw with this falling wedge over here. You broke to the downside here. So anything is really possible. Now let's jump into the RSI over here on the daily chart. So multiple support lines lost over here. I do apologize for the constant messages popping up on the screen. So as you can see, what happened over here is we have held this green trend line as support multiple times. I did show you this trend line in the last video. You have another bounce over here, then you lose the trend line, you consolidate a bit, you enter the oversold zone over here, which was a very good entry point for Multivac, and then from there you back test the green trend line as resistance, because once you lose once you lose a support trend line over here, you usually come back for a back test of support, back test of resistance, and if you get rejected from there, you're more likely than not to continue with the downtrend, and that's exactly what happened. You had your rejection here, and right now you're sitting at the index of 25, which means you are oversold on Multivac, and this is a great opportunity to start dollar cost averaging. So looking forward, this green trend line can potentially be our resistance level that we can hit for for the foreseeable future. Also, keep in mind this white trend line as well. We have 2 bounces or 3 bounces off of this white trend line, so we have to keep in mind this trend line as well. Also, the pink trend line over here, as you can see, is also a valid resistance level because we've hit it once. We had a fake out over here, obviously. Then we hit it twice over here. And then we hit it 3 times over here with a little fake out over here. So just draw this out. I know it may look a bit confusing, but once you really understand what's going on here, it's not that difficult. Now let's look for some potential divergences between the price action and the RSI. This is when the price action prints, for example, a higher high, but the RSI doesn't, or a lower low, but the RSI doesn't. Now, let's see. So this is a low over here on the RSI, and we're printing a lower low. Okay, so we take a trend line, and we take it all the way down. As you can see, the trend line is descending. That's why it's called a lower low over here. Now, if we have the same trend line on the price action, and we get the exact same picture here. So it's a lower low, no divergences. Now, these divergences can be preludes to future, future impulsive waves. That is what happens when you have a bullish divergence, a hidden bullish divergence, or, for example, an exaggerated divergence. There are 3 types of bullish divergences that I am aware of, and I don't think there are any other bullish divergences. But yeah, that's for the daily chart. And if I just zoom out to show you the Fibonacci retracement that I have set up, so you can set it up for yourself. Now, this is our swing low over here, okay? And our swing high is over here. This gives us the 1.618 target over here at almost 20 cents. So that's what I'm going to be targeting by the end of the bull market whenever that comes. And again, I don't know when that's going to happen, and I would be lying if I said that I did. Now, before the war started, I did expect the peak of the bull market to be sometime in June, May. But I think with the financial instability currently in the markets, I don't know if that's going to happen, perhaps towards the end of the year. But then again, that's what we thought last year. So, this is just a guessing game at this point, and I don't want to guess. I'm just going to be reacting to what the market, brings to me or what the market shows me. And I'm okay either way, right? The longer we have this consolidation phase, better for me, because I'm going to be able to dollar cost average in even more. So that's what I recommend doing. And let me just get rid of all the drawings for a second. Okay, there we go. So I just want to take a look at the EMAs over here. So as you can see, we had a bearish cross here at the beginning of December. Since then, we had this squeeze of the EMAs, an EMA squeeze. This is when the 20 comes up to the 55. It looks like it's going to cross it for a bullish cross, but then it ends up getting rejected back to the downside. This happened in the middle of February. And ever since then, it's been an ugly downtrend, to say the least, for Multivac. And you're getting a bit overextended from the 20 EMA, from the yellow line over here. And usually this means that you can potentially look for a back test of resistance relatively soon. And as you can see, you haven't had a touch of the 20 EMA since April 5th. So quite a long time, actually more than 3 weeks at this point. And yeah, so if, for example, if you want to look for a quick little in and out, a 32% trade, if you enter right now to the 20 EMA, that's something to look out for. From here to the 55 EMA, that's a 75% trade. So, entering right now is a lot more risk-free. It's not risk-free, but a lot less risky, obviously, because the lower the price, the safer it is for you, obviously. But that's pretty much it. That's all I have for this video. But if I just can bring out a little quick, as you can see, this is what I would have. Oh my god, the entire thing. Okay, so what I wanted to show you is this zone over here. As you can see, this accumulation zone over here is where we are coming to over here, as you can see. So potentially you're just going to be, consolidating over here before having the next leg up in the market. So I think if we don't lose the 0.5, we're all good, right? But if we start losing the 0.5 at that point, I would think that Bitcoin would be somewhere near $30,000, and that wouldn't be very, very good in my opinion. But we'll see what happens. Thank you all for watching. Feel free to follow me on Patreon if you want video requests, if you want to request some technical analysis for your favorite crypto, if you want to have my buy alerts, my sell alerts, what I buy, what I sell, obviously, then go over to the Patreon that I have linked down below in the description. It's a great way to support me and a great way for you to get more exclusive content. Now, thank you all for watching. I'm going to catch you in the next one. Goodbye and good night.